stocks are retreating from record highs today, but the real moment of truth of the market may come later this week when big banks kick off earnings season. JP Morgan, Citi, Wells Fargo on tap with Q4 results. And our next guest predicts earnings season will exceed expectations. Jonathan Golub is a chief U.S. equity strategist, head of quantitative research at Credit Suisse. Jonathan, great to have you with us.
Good to be here.
You think the reopening is going to be much, much stronger than everybody thinks, and that earnings are going to be great, guidance is going to be great. Isn't that what the month of December was all about, though, when the S&P 500 went up about 100 points?
I think some of that is. I think that the market is anticipating another fantastic earnings season, and the market is probably discounting that. I don't think the market is discounting the surge of economic activity that's going to happen once everybody gets this vaccine and everybody gets these dollars in their pocket and starts spending money. So I think there's a lot more good news ahead.
So in terms of the markets not estimating that in terms of the vaccine, I mean, are companies going to go out on that limb and say, you know what, we think the vaccine's going to come, we think it's going to be distributed, and we think economic activity is going to be stronger than we think, and so therefore we're going to raise our guidance? Our guidance is going to be strong. I mean, it takes that next step, right, of company confidence to go out there if we're going to expect guidance to be good coming out of this earnings season.
You know, I think that there's this feet dragging that's going on by everyone. I mean, listen, there's no such thing as a model, whether it's an analyst or a strategist or an economist, that can tell you what this is going to look like. And when you don't have a frame of reference, you play it safe and you put your numbers in a little bit lower. So even if companies tell you that they're looking for a really big second half to 2021, whatever they tell you is going to, on average, be too low. The same thing for stock analysts. And that's why earnings revisions in the last, couple of months have been fantastic. Analysts keep adjusting their estimates higher as they get more news. That's why earnings season is going to be higher, and that's why I think the whole year is going to end up with more positive moves on earnings.
Jonathan, it's Karen. Thanks for coming on. Let me just ask you, as the economy heats up again, are you afraid at all about inflation and whether that could ultimately hamstring the Fed?
Yeah, Karen, I think that's going to be the big conversation we're going to have. I just don't think we're going to have it until probably the end of this calendar year. But here's what's going to happen. This thing is going to open up, and people are going to have more money in their pockets, and this economy is going to beat economic expectations. And you're going to start to see inflation, not because of wages going up, which is a normal way, but you're going to see shortages. You're going to see demand for products and supply chains opening up that are not going to be able to meet the needs, and inflation's going to spike up on us. The thing, the Fed knows that that's not the kind of sustained long-term inflation that they normally focus on, and they're going to let it run a little bit hot. But I promise you that if you have me back here next January, we're all going to be saying that the Fed is behind the curve, that they in fact left policy too stimulative. And the same thing with all this money we're putting in people's hands. So great news for now. And in a year from now, we'll debate whether there was too much of this or not.
Jonathan, great to see you. Thank you.
Pleasure.
Jonathan Golub, he's got a $4,200 S&P target. Favorite sectors, financials, healthcare, also likes the energy, industrials. We started off talking about the banks. So Karen, I'll go back to you as a bank shareholder. What are you expecting in terms of guidance? What are we expecting from the banks? Because there are high expectations given the 6-month chart here.
Right. There are high expectations, but I think that the net interest margin spread, that's what everyone's excited about as the yield curve gets steeper. But I think we're not even going to really fully see those effects, because going into the fourth quarter, the 10-year was at 66 basis points. And now it's at 14, 15. So we're not even going to get to see the full NIM spread expansion. So maybe the headline's a little disappointing, but when you hear the commentary, that's going to be really important, and what they're seeing in the economy, and of course, credit quality. But I'm optimistic. I'm long banks.
Our friend Mohammed El Arian had tweeted earlier today 20 basis points of steepening in the curve in the first 5 trading sessions of the year, which is absolutely remarkable, Guy Adami. Will we see that in any way, shape, or form in bank guidance?
And the guidance, it's interesting if they'll speak to that. My sense is they will. So obviously that's a positive, as Karen just mentioned. But you know what? Think about how quickly it's happened. And again, the move in rates has been staggering. 10-year yields have more than doubled, I think, over the last 6 months, which is, I think, concerning. And if they continue to move at this pace, what is clearly a positive right now is quickly going to turn into a negative. With that said, quickly, if you're looking for a place to figure out where these stocks are going, you know, when JP Morgan tells you what their tangible book is, which they will when they release, I think you'd put a 1.8 multiple on that, and that's where the stock is headed.
Shepard Smith here. Thanks for watching CNBC on YouTube.